President who tells investors why 2014 is actually going to be the year of the stock picker. And Larry Shover in the pits of the CME. Larry, let's start with you. What is going on? Is this just a pause, or is this a downward trend we're looking at?
Well, David, no panic here, but make no mistake about it. The short-term dynamics here are quite disconcerting and cause for concern. I mean, all of 2013, we've been very sensitive to any kind of decline. But right now, what's going on, any type of knee-jerk reaction we get is quite prerogative for everybody. People take these rallies for granted. They keep thinking, hey, December, it's a Santa Claus rally. Of course we're going to rally. Now, that's not something you're going to read in a book or a magazine. It comes from 3 decades of trading. In my view, a lot of weak hands are holding on to the stock market right now. Not to say I'm bearish. I'm just saying maybe a cause for slight concern.
Right, and he's read the stock market almanac, I'm sure, year after year, and you do see that trend, but it may be bucked since the market has outperformed over the past year. But, Robert, let's bring you into the conversation. You say that 2014 will be the year of the stock picker. Let's back it up. We still have a couple of weeks left in 2013, and what do we see? We saw the volatility index, that fear index, the VIX, touching 15. That's about I believe, a 7-month high. Is that what it is? Yeah, so rather 7-week high. Did that give you pause to say, wait a minute, let's just put a little insurance into the portfolio for the moment?
Yeah, we've been booking profits, and I think this is actually healthy, that investors and money managers are saying, you know what, we've been up double digits for this year. Let's put some cash on the sidelines. Let's not get greedy. That's the important thing to take note of right now, is not to get greedy in this kind of market. And as we look into 2014, all the easy money has been made. This easy money gravy train may start to come to somewhat of a halt. You could buy a broad index this year in 2013 and make money very easily. But next year, amateur hour is going to be over, and the stock picker will rise again. Those guys that can bring alpha to the portfolio.
Larry Shover, much bigger than the loss on the Dow today was the gain in oil. We've seen a steady gain in oil. What's going on there?
Fantastic story. I love it when fundamentals and technicals collide. That's what's happened today. I mean, bear in mind that we've had this super congested situation in Oklahoma, Cushing to be proper about it, and we've had 2 pipelines that were not online, Seaway, TransCanada. News came out that TransCanada XL might be able to start pulling 700,000 barrels a day in January. Wow. That will pull a super congested situation into need really quickly. And even last week, people were thinking that TransCanada might be able to pull half of that out, not 700,000. Combine that with healthy PMIs coming out of the United States yesterday. Also, the EIA report coming out tomorrow. People are expecting a 700,000 draw. I think you add that to the fact that a lot of short covering by those nasty speculators who drive down the price of oil now are driving it back up.
Gotcha. Right. And by the way, Stuart Varney's show, Varney and Company, will have those numbers the second they come out. 10:30, right, Larry? 10:30 a.m. Eastern?
Yes.
Okay. All right.
Yes, ma'am.
Robert, let me then ask you, is there an energy name that's your favorite right now as you, the stock picker of 2014, looks into some of these names?
Well, there's several, but the one that comes to top of mind is Devon Energy. And Devon is one of the largest oil, natural gas producers in the U.S. They've nearly doubled their capacity in the last couple years, and they've consistently raised their dividend for years in a row. I think that's the pick right there when it comes to energy.
Robert, you know, the interesting thing about you is you are a bull, but at the same time you think we are in a bubble, but this is a bubble that you don't think is going to pop anytime soon, so you can't ignore it. You got to hang on to it, right?
Right. I mean, look at the people that have been the naysayers all this time, while the S&P is up 26% year to date or so. And the facts are they're right, but nobody knows the timing.
But should we take some profits? Is it time at least to clear a little bit of that profit off the top of the table?
Yes, it is. That's the short answer. Yes, books, and it's like a casino. Casinos control everything, but they cannot control when the player gets up from the table. It's time to take some of those chips and walk away.
That's right.
Larry, what chips are people grabbing and walking away that you see in the flows on the floor of the CME?
Well, some of the underperformers, outperformers, people are grabbing onto technology. They're grabbing onto financials, especially the big cap banks, something that's underperformed in a big way. You're talking sub-12 multiples compared to the S&P 500 of 500. People are rotating out, looking for value where value is to be had. Hard to find. So that's really what we're seeing.
Well, it is hard to find, but Robert, you found one of those tech stocks. There aren't many to find that have room to grow, but there's a tech stock that deals with water. Explain the stock.
So it's Xylem. Xylem is a multi-conglomerate. They're a global company. They're in water solutions technology, and they provide all the technology, advanced technology. Well, it means a lot of things. They do sanitation for cities, filtration systems for hot and arid areas, and they also create massive pumps to pull water out of flood-stricken areas.
Okay. People talk about water being the new oil or the new gold, and you wait and you wonder about that. There are a lot of names in this space. Why this one in particular?
Well, I think that they've got the grip on the entire world with all the brands and different patents and technologies. Anytime that I've looked in the news where an area was flooded or population growth was taking place, they were going to a Xylem product. It's not a household name, but a lot of their individual subsidiaries, they have like 16 or 17 brands.
Robert Russell, great stuff, Robert. Thank you so much. Larry, we're going to come back to you when the S&P futures close in just a couple of minutes.
Let's head back to Larry Shover in the pits of the CME. Hey, Larry.
Hey, traders really are looking towards 2014. Let's face it, what are the headwinds? Will consumer confidence jump back, get us out of this economic rut that we're in, this anemic recovery that we've had? How about a Yellen-led Fed and normalization of monetary policy? We're worried about that. Or what will drive U.S. interest rates? That has a lot to do with the stock market. And lastly, most importantly, will profits, especially in the S&P 500, start to catch up? We've seen a stagnant for the last 2 or 3 quarters. That's what's on traders' minds right now. They are checked out, waiting for 2014.
I didn't think earnings were that bad. I mean, it's tough to keep up with this market.
They could be better.
They're
low stagnant. You're right.
You sound like many of our moms. Many of our moms. Your grades could be better. Larry, good to see you. Thank you.
And they will be better. Thank you.